Apple, the tech behemoth, has seen better days. Its stock recently took a tumble. A steep drop has left investors concerned. What's behind this downturn? Escalating trade tensions between the US and China. New tariffs imposed by China have sent shockwaves. Apple, reliant on Chinese manufacturing, is caught in the crossfire. The tariffs threaten to disrupt Apple's supply chains. This isn't the first time Apple stock has felt the heat. Previous tariff threats have sent the stock tumbling. Investors are clearly nervous. The uncertainty makes it difficult to gauge the long-term impact. For now, all eyes are on the negotiating table. A resolution would be a welcome relief for Apple. Until then, the stock is likely to remain volatile. China, the world's second-largest economy, is a critical market for Apple. It's not just about manufacturing. Millions of Chinese consumers eagerly snap up iPhones, Macs, and other Apple products. The tariffs imposed by China threaten to dampen this demand. A 34% tariff on U.S. imports translates into higher prices for Chinese consumers. Apple, already facing stiff competition in the Chinese market, could see its sales erode. The company is in a tough spot. It needs to remain competitive on price while also protecting its profit margins. Adding to the complexity is Apple's heavy reliance on Chinese manufacturing. The vast majority of iPhones are assembled in China. This dependence on a single country for production makes Apple vulnerable to trade disputes and geopolitical risks. Apple is exploring options to diversify its manufacturing base. However, shifting production to other countries is a costly and time-consuming process. It's not a quick fix. The China challenge is likely to linger for Apple. Apple stock has been on a roller coaster ride over the past year. After reaching an all-time high in December 2024, the stock has been on a downward trajectory. Year-to-date, Apple shares are down a significant 22.6%. The recent plunge has erased months of gains. The stock is now trading at levels not seen since early 2024. Long-term investors, however, have little to complain about. A $1,000 investment in Apple stock 5 years ago would be worth nearly $3,000 today. Apple's stock performance is closely tied to its earnings. The company has consistently beaten analysts' expectations, posting record revenues and profits. However, concerns about slowing iPhone sales and the trade war with China have weighed on the stock in recent months. Despite the recent downturn, Apple remains a cash-rich company with a loyal customer base. The company's strong fundamentals and its track record of innovation suggest that it is well positioned for long-term growth. Volatility is the name of the game in the tech sector. Apple, despite its size, is not immune to these swings. The stock has experienced 24 moves of greater than 2.5% in the past year alone. That's a lot of ups and downs for even the most seasoned investor. The recent drop in Apple's stock price is not entirely unexpected. Investors are reacting to the trade war and other macroeconomic factors. They're not simply focused on Apple's past performance. Stock prices can be influenced by many factors, both rational and irrational. Investor sentiment, news flow, and even rumors can send stock prices soaring or plummeting. Trying to time the market is a fool's errand. Instead of obsessing over short-term fluctuations, investors should focus on the bigger picture. Does Apple have a sustainable competitive advantage? Is the company well managed? Are its products in demand? These are the questions that matter in the long run. That's the mindset of contrarian investors. They see value where others see fear. The recent plunge in Apple's stock price has created just such an opportunity. While some investors are heading for the exits, others are seeing a buying opportunity. They view the current market pessimism as overblown. They believe in Apple's long-term prospects and are willing to ride out the storm. Warren Buffett, the Oracle of Omaha, is a prime example of a contrarian investor. He's known for his patience and his willingness to buy when others are selling. Buffett's Berkshire Hathaway is a major shareholder in Apple. Contrarian investing is not for the faint of heart. It requires a strong stomach and a long-term perspective. But for those willing to go against the grain, the rewards can be substantial. Apple's success is about more than just iPhones and Macs. The company has built a vast ecosystem of products and services that keeps customers coming back for more. This ecosystem is a key differentiator for Apple and a source of future growth. Apple's services business, which includes the App Store, Apple Music, and iCloud, is growing at a rapid pace. This segment is less dependent on hardware sales and generates recurring revenue. Services are a key part of Apple's strategy to reduce its reliance on the iPhone. The company is also investing heavily in new technologies such as augmented reality and artificial intelligence. These investments could lead to breakthroughs in areas like healthcare, education, and transportation. Apple is not a company content to rest on its laurels. Moreover, Apple has a knack for creating products that people love. Its devices are known for their sleek design, intuitive interfaces, and seamless integration. This brand loyalty is a valuable asset that should not be underestimated. So, is Apple stock a buy, a sell, or a hold? The answer is nuanced. It depends on your investment goals, risk tolerance, and time horizon. Short-term traders might avoid it due to volatility. Long-term investors could find it attractive. Apple's innovation, customer base, and balance sheet are strong. But remember, the market is unpredictable. Do your homework and consult a financial advisor. Remember to leave a like on the video and subscribe for more videos like this.